Good evening. Am I audible?
Yes, sir, you are audible.
Yeah, thank you. So it's open for any Q&A if you have. It's an interactive live session. And if you've watched 2 weeks of the video, if you want to give if you have some questions, some queries that you want to get it clarified and so on, yes, you can. And I can try and see if I can address those questions. And don't ask me how to solve a particular problem. That we'll sort of do that, or we'll take it offline because it's a question specific to you. But more about the course, about the content, about specific doubts, etc., and the concept, etc. Yes, I have the time and I can sort of attend to address all those questions out there. The floor is open, and I have with me Mohammed Suhail. He is the TA for this course, the teaching assistant for the course, who has been, picture you can see, he's the teaching assistant for the course. And he normally is with me when I do the recording. And he takes care of the entire thing going live and the exams and other things out there. Exam paper is set by me, but quiz paper is set by me, but he manages the other administration part of it out here. Now, over to you, all of you. I think one by one, if you want to, you can just raise and then start. Yeah, Yashwant, go ahead, please.
Good evening, sir.
Good evening.
So, sir, I have followed week 1 and week 2 of your content, sir. And I have 2 questions.
Sure.
First question is related to one of the specific entry that we have made in specifically week 3, sir. In week 3, we were taking one example of the cafe. And there, in the food and beverages, I see that you have mentioned it in the assets when it was $2,800. I see that you have entered it in the assets column. And I was thinking that we would put it in the expenditure column.
Okay. Yeah. The second question?
The second question, sir, is throughout the course, sir, anywhere, are we going to touch upon the financial assets?
Okay. Sure. Now, let me address your first question. The first question, why we take F&B in the asset side is, that is the amount of food and beverage which you have bought, which you own, which is your raw material. Until you consume, it doesn't become an expenditure. The minute it is consumed, the minute the food and beverage is used, when food and beverage is used for cooking and serving to your customers, etc., that is consumed. That is when it becomes an expenditure. Till the point of time it is consumed, it is the raw material which is there with you. So it's an asset for you. For example, let's look at an automobile company, a automobile assembly, any Maruti or any of these entities. Let us say they buy tires from a tire manufacturer. There are tires in the godown of the car assembly company. These tires are not expenditure unless it is put on the car and then basically shipped out there. Somebody is buying it. As of now, you own the tires. So what happens? It's an asset for you. It's a raw material asset for you, and that is why it is there on the asset side of the balance sheet. That is the first question. I hope I've conveyed. The moment it is consumed, it becomes an expenditure. It gets out of the asset, becomes an expenditure. Now, coming to your second question, do we talk about the financial assets, etc. out there? Yes, we will talk about the financial assets also. That is the third part of the course when we talk about corporate finance. That is a long way to go still. So I think that's towards the last couple of weeks. Am I right, Phil? Yeah, last couple of weeks. And that is when we will touch upon the financial assets and so on. I hope I've addressed your question, Yashwant.
Sure, sir. Thank you so much.
Welcome. Any next question? Next, please. I have some questions on the, there have been some questions that some of you have raised on the Google form or the Google sheet. Let me try and see if I can address each one of them. I think there's a question by Hemanti. There's a question, there's no question, sorry. Vaishnavi, there's a question that I'm pursuing BA Economics Semester 4. How will this course be effective, and please guide me as I have more interest in finance. What opportunities are there open for me and the near future, and so on. This is a very, very basic course as of now. When I say basic course, this is a level 1 course. Level 1 course will give you an idea about the entire concepts of accounting and finance. In case, since you say you are interested in finance and you want to pursue your interest in finance and you want to develop, make a career in finance and so on and so forth, then the concepts what you will learn, pick up at this stage is going to help you, what do you call it, as study further or gain knowledge further and so on and so forth out there. So in that sense, it's a level 1 course which is going to build what is called as a foundation if you want to specialize in finance out there. I hope I've addressed your question, Vaishnavi. Now I go to the next question out here. If I'm not addressed, you can ask me. Next question, of course, Yashwant. We have done case studies, could you explain similar case studies, how banks manage their income sheet, balance sheet, and how our financial assets. Banks also manage the banks also manage their income statement and the balance sheet exactly in the same way. And it is not going to be very different. Only thing is, if I have to put it in a much more simpler terms out there, they normally say, is my salary credited to the account? So what happens? When money belonging to you, you deposit in the bank, that is, your money is in your SB account in the bank. For the bank, it's a liability because your money is with them, they owe you the money. Whereas when bank gives you a loan, you have taken a loan from the bank, what happens? In your balance sheet, it's a liability because you have borrowed. As far as the bank is concerned, their money they have given to you, it's an asset for them. That is all the way you have to sort of look at it. So it slightly changes. What is an asset? What is a liability? What is it that the bank owns? What is it that the bank owes? Bank owes all the deposits. Your fixed deposit is your asset, whereas for them it's a liability. Your savings account, money in the savings account is your asset, whereas for them it's a liability. You take a loan from the bank, it's a liability for you. For a bank, it's an asset because their money is with you, right? That is the basic difference. Otherwise, the rest of the things are all the same out there. I hope I've addressed your question, Ashwin. Now, what is the exam pattern going to be? How much of syllabus you cover to perform well in the exam? The course itself is going to be this is a question from Swapnil. The course itself is going to be very basic. And exam, whenever you have the exam, whatever I cover. I mean, I'm not getting into the complete detail that is detailed to the, as I said, I'm not going to go cover by cover in the textbook or page by page or chapter by chapter in the textbook. I'm covering the concepts broadly. As far as financial statement accounting is concerned, I'm covering balance sheet, income statement, cash flow statement, and ratio analysis. Only these 4. Beyond that, I'm not covering anything. Like if you talk to your friends who are doing their undergraduate in undergraduate in commerce or accounting, they would say, no, write journal entry, write ledger account, learn debit and credit, etc. No, I'm not touching upon all those things. I'm giving you a conceptual understanding of basic. For example, tomorrow you look at an annual report, the financials in an annual report, it should not look like Greek and Latin to you. That is the perspective with which we are looking at it. So in that sense, what we cover will be the basic concept. I think if you can stick to that, that will be great. What should be the next move, Vaishnavi? I'll come to your question from the chat box. Next move is, once you finish the course, if you're interested in finance, any specific aspect of what we teach, you can pick up an advanced course in that. For example, we will be covering some bit of risk and return when we talk about financial management, some bit of what you call it as valuation of equity and bonds when we cover financial management, whatever you like. In this case, some bit of accounting, you can even get into forensics, accounting, financial forensics, you can get into even accounting forensics, what interests you. And you can pick up the next level specialized course once you have the base ready. Ashwani, what is the best way to study the course besides your videos? Pick up the textbook, what I have suggested. Pick up the relevant chapters, maybe walk through the relevant chapters. And the textbook, what I prescribed, has very interesting exercise out there. That is accounting, financial accounting in the textbook. What we have prescribed as very interesting exercise out there. Try and solve some of the exercise. You will have a better hang of the whole thing out there. Harshdi, which books can we use to prepare for exam? Just the any accounting book you can use. I mean, there is the whatever books I've suggested is what I follow broadly, because that's the book I like, and I sort of enjoy doing that. If you can follow that book, it's well and good. If you follow a typical conventional accounting book, you will miss out on a lot of things. Reason I'm not I'm not teaching you how to prepare a financial statement, how to prepare a profit and loss statement like a commerce graduate or a BCom person is trained. And I'm not looking at it from that, or a chartered accountant is trained. I'm not training you from that point of view. So it's more at the conceptual level. So it would be good if you can pick up the textbook, what I suggest, or any accounting book is also perfectly fine. But the accounting book, what I suggested, I think only e-copy is available as of now. I think it's out of print or in the store. I'm not sure. So I'll do the check. I think e-copy is also available. I think it should be fine. Deepika, what courses particularly you will suggest? Can you share some besides MBA, FRM, or CA, FA, and others? Okay. If you're looking at making a career in finance, these are the kind of courses what you have already listed out there. But if you're looking at simple to gain knowledge in this, then look at some short-term courses out there. Short-term, there are a lot of short-term courses in these domains out there, in these domains of, for example, risk management or, or corporate valuation and so on and so forth. But if you want to have a career in finance, well, these are the only courses what you'll have to do. I don't think there's money, any other way to get around that. Ramnik Singh, I'm currently pursuing PGDM and I'm currently in the first year. I'm interested in taking finance as one of the streams in my second year, but I did my graduation in mechanical. Apart from this course, what more should I do to upgrade my finance knowledge, which will not help me not only in my career, but also in the job? I would say just pick up a business newspaper every day and read through that. For example, one aspect I would suggest, you would say, pick up a business line on a Sunday. They have what is called as a beautiful analysis of all the mutual funds. On every Sunday, business line comes up with beautiful analysis or rankings of all the mutual funds. Try to even understand. Pick up a couple of funds. Start tracking on them. Go to moneycontrol.com. Like I will even be moneycontrol.com. Pick up those funds out there. One of those funds. Keep tracking. Look at moneycontrol.com, how they are analyzing it and what is their recommendation. Look at your business line. Try and keep analyzing this. So pick up a business newspaper every day and read through the business, physical copy of a business newspaper, not just on the app we see some things and everything. So spend time on a business within business newspaper. I think you will pick up a broad knowledge in finance out there, and that will sort of help you out there. If you're specifically interested in stocks, I said Sunday business line, they give you mutual fund analysis. Start with that. I'm not saying that is the end of it. Start with that. Start tracking some of those. Why is it 5-star rated? What does the returns mean, etc., and so on and so forth. In fact, I can even share some of those pages out there, and that will give you a lot of idea about it. If I can have a minute, I can even try and see if I can share the page out there. How does it just look like? That's all. It's more of information and nothing beyond information out there. 1 second. I'm just not getting it. It's supposed to be on the machine, but yeah. Sure. I'm just going to share share my screen now. Just one piece out there. I'm just going to share one. Typical Sunday business line will come up with what do you call it as mutual fund analysis. They just do this. They just give you this kind of ratings out there for equity funds and everything. Now, what are each of these? What is the CAGR growth? What is the expense ratio? And what is the NAV and everything? They say direct and what is the expense ratio of the regular as well as the direct. You can see that. Try and see that. Try and pick up one or two of these. Try and start tracking. That will give you a beautiful idea about some exposure in this domain out there. And more out of curiosity, try and do that. Every Sunday on a business line, you'll find that page out there. These kind of pages. Pick up one of those and start tracking it. I hope I'm addressed your question, Ramnik. Anand Ramesh, let's consider the case. I buy a car, rent it out to generate income on a regular basis. Should I account it under an asset that is depreciating, or it is a liability? If it's an asset, could you please clarify how I'm supposed to visualize? You buy a car, Anand Ramesh, on whose name is it registered? It is registered on your name. When it is registered on your name, who owns it? You own it. When you own it, it is obviously your asset. Of course, a depreciating asset. You are renting it out. You're renting it out and generating income out of it. That is a revenue that will come in the income statement. Whereas the asset is simply owned by you because it is registered by you. Tomorrow, it meets, God forbid, it meets with an accident and somebody gets hit or somebody gets hurt. Who is responsible? Owner of the car. Who is the owner of the car? You. That's it. That is how it is looked at. I hope I've addressed your question, Ramesh. Anand Ramesh? Yes, no? I think it will be fine. Short-term courses from where? Can you share some more information on this? I think, yeah, there are a lot of these short-term courses out there, but you'll have to be very careful in choosing which one out there. You have to be very, very careful. I don't want to specifically recommend one or two. And you have to be extremely careful in choosing because some of them are courses which you get a certificate and not much value addition, etc. But prefer to choose a course where there is some value addition. Maybe I'll try and see if I can collate some information and try to put it up on the page where I can share information or share with you by the next class. Offhand, I don't have any specific recommendation, or I don't want to. I would prefer to keep that away. But yes, there are short-term courses which I can suggest out to you. 1 year financial, what do you call it? As 1 year courses are there. Many 1 year diplomas and courses are there from good places. I think if you can choose one of them, it will be good. Coursera, yes, you can Academy, edX, plus some platforms you can use that, like Sohail has put in, but those are okay. They're similar to NPTEL courses out here, what you see on advanced courses, but you'll have to choose a little more. 1 year kind of a course out there. For example, if you say London School of Economics offers a 1 year course in risk management per se. That's not in India, agreed and everything. 1 year course in risk management. So choose those kind of courses out there. 1 year, which is from good places. INSEAD, Singapore also offers some kind of a course for about 6 months out here. Those kind of courses will always be helpful. I will sort of collate a list and then talk to you about it when we meet in the next class. Yashwant, the value of assets are changing time to time. Example, real estate. How do we track the improvement, the land value in balance sheet income? In income state, in balance sheet, we will always record depreciation. We will not record appreciation. That is where we talk about, when we talk about accounting, first thing accountants are accounting, we follow the principle called conservatism in accounting. When I say we follow a principle of conservatism in accounting, we are conservative. That is, we record the downside. We will not record the upside, but upside is fine. That is, when you do the revaluation, you will record. Whereas whenever there is a downside, you will reduce the value of what you own, because the value of what you own has reduced, and that is the real value is what you will indicate. It can fetch more than what you indicate. I don't care about it. Because why? Risk is where? Risk is only on the downside. Risk is never on the upside. Making 100% return is never risk. Making a 0% return is a risk out there. So I always cover my risk from that point.
Thank you, sir.
Any other question? You can even raise your hand and then put up the hand and ask me a question. I can certainly take your doubt. Hope this, you got the message on the live session sometime last week, right? I'm not sure. I think NPTEL would have intimated to you. So we will try and do one live session every 2 weeks. So that every 2 weeks, if you have a problem, you can always meet me and discuss and address. And myself and Mr. Mohammed Suhail will be here. Both of us will be online, and we will take questions from you every 2 weeks. Live session. So 2 weeks are over. This is the third weekend we have now, and we will have it the week 2 weeks from today. We'll have one more live session and so on and so on. Yes, Mr. Ranganathan?
Yeah, Professor, your way of teaching is very interesting and it's very conversational, and you have been reiterating the points very repeatedly, and that drives in the point. I go back to my own younger days when my school teachers used to talk like that. Thank you so much. I have only one question. In the week 3 lecture, was there one video missing? Because you were referring to the cafe income and expenditure statement, but I do not see a separate video session on that. Or probably was it left for the students to work it out?
I think FA and the Loan Paint Cafe video session on the income statement, it is there. Thank you very much for the compliment, sir. Loan Paint Cafe video session is there. I will just ask them to check up. I think it is there. I'll ask them, Suhail, to specifically send you an email of that lecture per se, because I've reviewed all the lectures. It is in sequence. Maybe which particular lecture we talk about the income statement of Loan Paint Cafe. I think Suhail will specifically email it to you as of now, or send you a message as of now, sir.
I got the same thing from your classroom lecture in 2019. So I got the same. I got the idea. But in the sequence, when you are talking there are 3 videos, or 4 videos actually, and in the third video, the second video, you were referring to income and expense statement, but that specific video was not there. Probably I am mistaken.
Sure, sir. I will check up, and then I'll ask Suhail to get back to you on that. Specifically,
thank you.
It is, but because we have recorded it, it is there. So Suhail will specifically get back to you with the video.
Sure. Thanks.
Thank you, sir. Thank you. Next, any other specific question? You can feel free and ask me. I'm very friendly. Don't worry about it. I mean, you can ask me. Even in IIT Madras, where I teach, students are quite friendly with me. So you can ask me. You don't have to be hesitant to ask me a question. Or you want to type it out in the chat box? Yes, most welcome. You can type it out in the chat box also. I have my chat box open. I think the last message I have is from Deepika. Yep.
Sir, good evening, sir.
Yeah, go ahead, please, Rohit.
Sir, in the first week, one of your lectures, there was a transaction example given of balance sheet and income statement correlation, interaction between them, where raw material was purchased on credit for 30 days and an amount of 500,000 was paid to the creditors in that case. So I was just wanted to know that it was not considered as an expenditure only because that raw material has not been used as an amount as a material for production. That's why.
Precisely. Your understanding is perfect. You are on dot.
Right.
Moment it is used, it becomes expenditure. Till it is used, it's an inventory. It's an asset for you. You own it.
Right. So thank you, sir. Your lectures are very inspirational and motivational for.
Thank you, sir. Thank you. I have a background in both accounting and finance. Basically, a trained accountant, and then I have a PhD in finance and a basic in accounting and an MBA. And so I teach both accounting and finance. Exams are going to be multiple choice, more on the conceptual side. You would have seen the first week and the second week quizzes. So we will slightly make it a little more number oriented. That's all what we are going to do. We are not going to, I mean, those who are taking tomorrow, taking the exam and everything. So. Yes, Dr. Sapna Ramani. Session. Thank you, Dr. Sapna. What is written off? Yes, Jagtap. Yeah. For example, let us say I buy a machinery for 1 lakh. I use it for the machinery. When I buy, I imagine that I'm going to depreciate the machinery over a period of 10 years. I use the machinery for 6 years. At the end of 6 years, the machinery value, I bought it for 1 lakh. The machinery value is still worth about 40,000 because 10,000 I depreciate every year. So first year 10,000, second year 10,000, third year 10,000. So 6 years is gone, 60,000 is gone. So the machinery value at the end of what you call it as the 6th year or at the beginning of the 7th year is 40,000. Now technology has changed. I want to buy a new equipment because this old machine is going to be useless. I am unable to sell it. So what happens? The asset which is there worth about 40,000, I write off. I write off when I write off, that means I will say that it is not going to be utilized anymore. It has no value. It is going to be junk. So I will write this as an expenditure that is 40,000 and asset written off 40,000 rupees, and I will take it out of the asset side of the balance sheet. So what is happening? I'm disposing it off, not selling. I'm writing off the asset. That is what we call it, a writing of the asset out there. Just an example I took and then I tried to explain. Am I with you, Yash Jagtap? I'll come to you, Dr. Sapna, in a minute. I have one more question. Thank you, Rohit. Yes, Dr. Sapna.
Sir, thank you so much. Wonderful sessions. Just wanted to understand the written of what you said. In our hospitals also, like we keep any machinery, we keep the depreciation mostly for 10 years. But usually the machine doesn't go waste. We still use it. So where does it come? I mean, is it there in the balance sheet, or we keep using it, put it as a part of revenue and mark it as written off?
Now, the machinery has a salvage value, man, doctor, because
Correct.
the machinery, for example, I buy for 1 lakh. Imagine the salvage value. That is at the end of the life of the machine, when I scrap it, the scrap value is, let us say, 5,000 rupees. So after the life of the machine, the value of the machine is 5,000 rupees. And it will appear in my balance sheet as 5,000 rupees for the rest of the time I am going to use it till I dispose it off. But there is not going to be any depreciation that is going to be charged on the machine. But the machinery will lie in the balance sheet at the salvage value. which is usable, I'm using it. There's no harm in it. But there's no depreciation that I can charge on it. But because I'm using it further, if the value comes down from 5,000 to 3,000, then I will write the 2,000 as depreciation, additional depreciation.
Got it, sir. Thank you so much. Thank you so much.
Thank you, Doctor. May I know your field of specialization, Doctor?
Sir, I'm into hospital administration. So
Okay.
I keep seeing business balance sheet, and also it's nice for me to go through this again. And I mean, yeah, I'm liking it.
Thank you, Doctor.
Thank you so much.
Thank you. Yes, Yashwant.
Sir, I got to hear another question on write-off, sir. On the similar grounds, I got to listen, like the term that we use in the write-off in our daily jobs is, so let's say we are a real estate firm, sir, and we have booked an invoice for, let's say, $1,000. It's a land sale, or let's say it's a land sale, and the invoice is booked for 1,000, and we have accrued the revenue. So I think that goes into the revenue side of the statement. Let's say we have, let's say 30 days later, we got a payment of $800, which is 80% of the payment. So that goes into the cash. Let's say after some time, the client with whom we did the sale, they are saying that we are unable to pay the payment. Then upon agreement, we have written off this additional 20%.
Yes.
So which side does it go, sir? Because revenue is already accrued for
Revenue is accrued
$1,000.
1,000. It can happen in the subsequent financial year. When it happens in the subsequent financial year, we will write under the expenditure side, revenue, accrued revenue, not realized, $200 or 200 rupees. You will write in the expenditure statement in the year in which you realize that it is not, you are not going to receive it.
Okay, it's an expenditure basically.
Yes.
Okay, sir.
And then you will take it off from the asset side, because till you get it is an asset, right? Receivable.
Correct, receivable.
So
Yes.
you will move it, you write off as an expenditure, you will take it off from the asset side.
Yes. Okay, sir. I get it. Thank you.
Yeah. Yes, Yash, what is the expenditure in advance? Please explain, explain with the examples. What is the expenditure and advance? Expenditure means you have enjoyed the benefits of the amount that you have spent. I go and I booked for example, I want to go on a holiday. I have booked in a resort. I go stay in a resort, and at the end of it, I pay for my stay in the resort and come out. That means what? Expenditure. I've enjoyed the benefits of staying in that resort. I want to stay in the resort in the month of March. So I have booked and I have paid money as of today. But money as cash has gone out of me. That is, I paid in advance. But on the March 1st, I decided I'm not going to go to the resort. Maybe on February 25th, I'm not going to go to the resort. I have some other engagement. So I'm canceled. I can get the money back. So wherever I have not enjoyed the benefits of the money that I have spent is all in advance provided. Where I've enjoyed the benefits of the money that I've spent, expenditure. I hope I'm clear. Yash Jagtap. Any other questions, sir? Well, if there are no questions, then I will close the session. I'm going to hold on for 5-10 more minutes. Dr. Ranganathan, Mr. Ranganathan, I think Suhail will find out the lecture series and send it to you. I will take care of that. Yes, Maunil Shah. Your question?
Hello, sir. Thank you for your explanation. I have one question. Like in week one, like last lecture, while you were explaining balance sheet, I have seen that the rent of the particular place which we keep for any of our office work, we normally keep it in our expenditure section of our income statement, and it comes in the last day or last day of the month or next month's first day. So what about first month? It shouldn't be from the day one.
Well, the first month, what happens is on day one, I've taken the place on lease. And when will I have to pay rent? Only after I enjoy the benefit of it. Theoretically, from what you say, first day I spend there, then 1 day rent is due. So 1 day rent is accrued. Second day I stay, then 2 days rent is accrued. 10 days I stay, 10 days rent is accrued. Perfectly all right. That is how we have to do it. But in reality, what happens? When it becomes actually due at the end of the month is when it becomes due, payable out there. So that is when you normally account for that rent out there. Whether it is the first month or the last month. When it's due, we take it. Otherwise, theoretically, your argument is right that rent accrues when every day I enjoy the benefits of the place. So every day what happens? I have to keep adding in my expenditure, rent for day one accrued, rent for day two accrued, and I have to keep it in the liability side, rent for day one, rent for day two, on the liability side of the balance sheet. What is it true? But normally it is all clubbed and treated at the end of the month. Same with the case of salary also.
Okay, got you, sir. Okay, no
Thank
problem.
you.
Thank you.
Ramnik, yeah. Tell us, accrual concept based on money received or not? Accrual concept is not based on money received or not. Money earned, not received. That is, I have sold goods on credit today, 30 days credit today. That means when will I receive the money? 30 days from today. But when has the ownership transferred? Today, the sale has taken place. So what has happened? My revenue has accrued today. That is what is accrual concept. Whatever, when it has accrued, the expenditure, that is accrual concept, goes with transfer of ownership. When the day ownership transfers, it is revenue or expenditure as accrued, irrespective of whether you have received money or you have not received money. The moment ownership transfers, you are liable to pay if you have bought the goods. If you have sold the goods, you are eligible to receive the money. So that is what is accrual concept. Hope I addressed your question, Ramnik. The last part of the video, I think it's a 30-hour lecture. The last 3 hours, 2-3 hours, I think we are ready to record. I think we'll be finishing the recording hopefully by end of this week. And I think they've recorded so far about 27 hours, right, if I'm not wrong. So maybe about 2 to 3 hours more, and we will be recording it this week, maybe over the weekend, and then we'll be uploading. Financial accounting, corporate finance related, of course, yes. We'll talk about again back when I talk about corporate finance, I'll again talk about balance sheet. If I have to put in simple terms, we have seen the first lecture. What is finance management? If I have to put it in a very, very simple, crude form, financial management is sourcing money is one aspect in the best possible way. Sourcing money at the lowest possible cost out there. That is the liability side. That is what you source. Investing money, asset side, with having to get the best possible return out there. You are investing to get best possible return. That is what is financial management. So again, it goes back to balance sheet, and from there we sort of look at that. Accounting, and when we do accounting in SAP, it is the same. When you do accounting in SAP, only thing is that's a package. You just make the entry. You just tell you have bought goods. You just enter that you have bought goods. So it automatically, because it's programmed well, it automatically goes and classifies out there into your asset liability or whatever it is out there, number one. Number two, moment every time you say you're paid cash, it will adjust your cash balance and it will tell you what is the amount of cash. Cash flow statement also gets taken care of. And it is just that it's automated. It is not that without knowing the concept, I can keep entering and it will take care of it. And it's all integrated. In SAP, it's all integrated. For example, earlier what used to happen was the purchase department is separate. Purchase department will issue invoice, purchase. Your cash management department would be separate. Your sales department would be separate. So, I mean, these three do not talk to each other or do not meet. So what happens? But money flows only through all these three out there. So in a SAP, all these things are integrated. So the cash flow management is better. Efficiency will be better. Any other questions, sir? It's 6:40, no? I'll hold on till 6:45. If there are no questions, I'll close at 6:45. Otherwise, I have all the time. I can, if there are questions, I have all the time. I can take any number of questions. These live sessions every 2 weeks is what I plan as of now. But if there is demand, I can even have it every week. I don't have a problem. But as of now, I'm thinking of every 2 weeks. So the first 2 weeks are over. So we had one. And then we'll have 2 weeks from today again, and so on. And I chose the time of 6 p.m. because since most of you will be working professionals and all of you will be working professionals, so I thought maybe at the end of the day, 6 o'clock, hopefully it will be free. I thought, I mean, maybe I'm wrong in my understanding, or if you feel any other time would be suitable, also I can do it. Here, I work at IIT Chennai, IIT Madras, and I'm a faculty of finance and accounting out here at IIT Madras. Take it after 6:30, sure. Next class, we'll keep it at 6:30, not a problem. Getting the answers to the assignments we submit, or we would be given answers at the same time we submit, so that we can get our correct and our mistakes. I think the answers to the assignments will be given right up front. I think they will take care of it. The admin will take care of it. They'll put it up immediately. I think you can see the answers of the assignments. Can a company show positive cash flows while facing financial problems? Of course, yes. I can just go simply to the bank and borrow. Then there is positive cash flow. I will have financial problem. I have financial problem, but because I'm not being able to collect receivables, and I'm collecting receivables only now, I'm somehow positive cash flows as financial problems. Can. I think so. The admin procedure, Ramnik, I think I'm not very sure. I think you'll have to check with NPTEL, because I do only the course administration part of it, setting the paper. I think they can take care of that. Two types of preparation, but which type? Both. Both written down value and straight line are used by the companies. Most of them use straight line. Written down value is also a method which is used for depreciation, jacked up. These two are commonly used methods, and these two are allowed by income tax laws. Any similar program for GST? Maybe there is, but I don't know really, because I'm not one of the tax man. I only pay taxes, and unfortunately, I've not got in for GST. I can check out. I can ask Suhail to check out. I don't think NPTEL. I'm not sure if they have a program on GST. I don't think. I'm not very sure about NPTEL and GST, but. GST one of the in one course is there. Okay, introduction GST, maybe that's a course. I'm not very sure. Cost accounting and costing. Cost accounting, costing, management accounting, more or less mean the same. Not much of a difference, Vaishnavi. Am I able to communicate? I hope I keep stressing. I'm not too fast, I thought, in my lectures. I think it's at the pace is okay. What is the cash flow? Cash record, very regular. It's a cash flow is nothing but the inflow and outflow of hard cash or money deposited in your bank account. That is what we call it as cash flow. And we spend a lot of time in understanding cash flow statements. I think week 4 or week 5. Week 4, week 5, we spent week 4. We spent a lot of time in understanding the cash flow statements out there. Yes, Doctor. Cash flow. Let me wait for 2 or 3 more minutes. If there are questions, I can take it. Thank you. Okay, if there are no questions, then I think I will slowly close the session. And if you have questions, you can send an email. We will address it. I'll meet you again in 2 weeks from now. We'll have one more live session. Thank you. Thank you very much. Thanks for joining. Thank you.